Hi there, everyone, and thank you for joining today's Fiber Broadband Association webinar. My name is David Norris. I'm the webinar producer here at Fiber Broadband Association. And today's webinar is being presented by Sonar Software with panelists from Avalara. Today's webinar is titled Beyond the Bottom Line, How ISPs are Automating Tax Compliance Without the Headaches. So perfect for this time of year. Before we get started, I've got just a couple of quick housekeeping items to go through, and then we will jump right in with our panelists. So first of all, if you've joined our webinars before, you may have noticed the interface is a little bit different here. But just as before, you are in listen-only mode as attendees. However, we do want to hear from you. We will have time for Q&A at the end of today's presentation. And you can ask your questions using the Ask a Question tool, which is located in the lower left-hand corner of the screen there. I also just want to call out that we have a resources panel, which is over on the upper right-hand side of the screen, and that has links to other resources that you may find helpful. This webinar will also be available on demand. We usually have that posted within 24 hours on the FBA website, and you can find that under the Events tab with the Webinars option. And finally, we do have a brief survey that happens at the end of today's webinar. We really would appreciate if you could take just a moment to do so. It helps us out quite a bit and lets us know, lets us ensure that these are valuable for you and we're hitting the right content. And with that, let's just jump right into today's presentation. So once again, we are joined by panelists today. We have Georgette Lopez Aguado from Sonar, who is the VP of Client Relations there at Sonar. She is joined today by Steve Lakoff, the GM of Communications and Excise at Avalara, as well as Jason Darlin from Avalara, who is the Product Solutions Engineer there. And they're going to share how fiber-focused ISPs are turning tax automation into strategic advantage. And so with that, I will go ahead and hand things over to Georgette to get us started. So Georgette, you want to take it away?
Excellent. Thank you so much, David. I appreciate the introduction to our guests. I will let you guys know that I'll be looking at the Q&A throughout the session. So if something pops in your head and you'd like for us to address it at the end of our conversation today, we'll take as many questions as we can. Steve and Jason and I have done this presentation before, and I feel like I get the easy part. I get to tee everything up and basically hand it over to Steve until it's time for a little bit of a demo. So without further adu, I really want to share this small disclaimer that while we hope that you find this information to be helpful, this is for informational purposes only, and you cannot construe this as legal or tax advice. So that's our little disclaimer to get the ball rolling. And without further ado, I really am going to hand the reins over to Steve to get this party started.
Great. Thanks, Georgette. Yeah, thanks everyone for taking the time. I think we touched on kind of who we are, just by way of introduction. My name is Steve Lakoff, and I'm the GM for our Avalara for Communications Business Unit here at Avalara. And then I am joined by Jason Darlin, who is a Product Solutions Engineer within our business unit, and he'll be participating and driving a demo as we get a little bit later into the presentation. But to kick things off, I think what we wanted to start with is to talk about some of the benefits of automating tax and compliance, and then also as we get later into the presentation, talk about some of the benefits of the joint solution that we've developed in partnership with Sonar to really provide support around communications tax compliance and to have that fully integrated into the billing and accounts receivable flows within Sonar. So I think the first thing we wanted to talk about a little bit is just the complexity of the tax landscape, specifically when you're talking about communication services, right? So as I think most of us are probably aware, if you operate within this space, tax compliance within the U.S. is really an incredibly challenging proposition, right? You've got unique rates that apply, not only at a federal, state, but also at a city and a county level. Clearly as, revenues become challenges, states have become more, in other jurisdictions have become more aggressive from an out-of-state audit perspective, new laws are enacted all the time, right? We're talking about literally thousands of jurisdictions and then multiples of rates and rules that can apply, on a very granular basis, depending on the product that you're selling and where it's selling, and mistakes are very costly. But that's just kind of a general overview, of the tax landscape. If we get a little bit more specific here, if you just talk about this is just sales and use tax, right? There are over 13,000 jurisdictions within the U.S. alone. And then when you talk about the taxation regime for, telecommunications, now you're talking about a multiple of that 13,000, right? Because as you know, you've got sales and use taxes, and then there is a whole separate regime and set of taxes that apply specifically to communication services, right? And so, for most companies, handling this complexity from a manual perspective just simply isn't viable. Automation is really kind of a table stakes proposition to ensure that you're taxing from an accurate perspective. And then as you get deeper into the compliance cycle, when you talk about returns, that complexity just cascades. And so we wanted to talk a little bit about what, some of the specifics and kind of, almost the anatomy of communications taxes, and delve into that complexity and really highlight what makes it so challenging. There are a number of factors at play here. The first is that multiple taxes often apply to the same service, right? So depending on what you're selling, what jurisdiction you're selling into, the type of customer that you're selling into, it's not a single tax. There's going to be multiple taxes that apply. In some jurisdictions, you may only be subject to sales and use taxes, but frequently there is going to be a separate set of communications taxes, and it's not just one tax. There's a whole range of taxes that apply specific to the same service. Not the same service, but depending on the type of service that you sell. And so, one example that we call out frequently is that, if you're selling voice services into a lot of jurisdictions in California, for that one line item on an invoice alone, you could be subject to 13 separate communications taxes, right? So we are talking about, a very complex multi-tax environment. The next is there's going to be, a wide variance in the tax application for different types of communication services. So if you're selling voice, there's going to be a set of taxes specific to voice, specific to those components of voice. And that can be very different if you're talking about selling video services or data services. And so it's very important to align what you're selling and to have that mapped to the specific tax types that are going to apply. The other thing is there are different tax outcomes for different types of buyers and sellers. So if you're selling direct to consumer as opposed to a business, your tax rates, that can be a driver of how taxes are applied. And then also those taxes can vary based on the type of seller. So if you're a regulated facilities-based provider, that can have an outcome on the taxes, again, depending on what you're selling. There are also very complicated situs rules. And by situs rules, what we mean is essentially taking a customer address and mapping that to a specific tax jurisdiction. That's really the first step in driving the calculation of a tax. And so in many states, Florida is an example of that. Kentucky is an example of that. The jurisdiction boundaries for communication taxes are different from that of sales and use tax. Right. So if you're selling to a customer, you've got the physical address of those services that you're selling to. The jurisdiction for sales and use frequently is going to be different from the jurisdiction and the boundary and the authority for communications taxes. Communications taxes, there are a lot of special districts. Frequently, they're based on, library districts or school zones. And so that just drives a whole different set of complexity here. And then the other piece is that the math is complicated, right? If you talk about sales and use tax, that tends to be very straightforward. You're talking about a percentage that applies to the bill charges. When you get into communications taxes, there are going to be taxes that are similar to that are based on a percentage of sales of the dollars that are sold. But there's a whole set of taxes that are going to be based on lines or minutes. There are, invoicing caps and thresholds that can be applied on an invoice level basis or on a per line basis. And so there's a lot more complexity in terms of calculating the taxes for a lot of communications taxes. There are also specific tax presentation requirements. So literally jurisdictions will dictate, the specific literals, that you need to provide on an invoice based on what's sold. And that's something that also is unique to communications taxes. And then there's just messy nomenclature, right? How a jurisdiction characterizes a tax, right? Whether they call it a PUC fee or a PSC fee, that can create a lot of confusion and complexity in terms of just determining what taxes apply. And then you've also got situations just where, the regulation has not kept pace with innovation and how these services have evolved over time. And so really understanding what applies to a specific service can be a challenge in and of itself. And so we just, obviously there's a lot of complexity. I think we just wanted to provide, a really high level overview of the different types of communication taxes and how they can be categorized. We tend to think of them in these two very broad categories, but as we outline, even within those two simple categories, there can be a lot of overlap. But the way that we think about it is, in one bucket, there are taxes that apply to the seller, right? And so these tend to be, federal or state level regulatory charges, things like USF or TRS Lifeline charges, their agency fees. Those are typically taxes that apply to the seller, and they are passed through on some kind of cost recovery basis as regulatory fees. And then the second set of taxes are taxes that apply to the buyer as a direct tax. The seller is responsible for collecting these and then remitting these to the jurisdiction. And so here you're talking about sales tax. There's some excise taxes that may apply to communication services. UTT in California and CST in Florida are good examples of that. And then the whole family of per line charges, right? E911, TRS, poison control, suicide prevention. So this is just kind of a high level view, what we view as the landscape for communication taxes. And so we've talked a lot about the different types of taxes, the challenges in calculating those taxes, but calculating the tax is really just kind of the tip of the spear from a complexity perspective. When you're calculating and collecting a tax, that is generally going to translate into a return or a set of returns that need to be filed and remitted to a whole range of jurisdictions. And so, there are 7,000 plus potential forms just for communications taxes that span all the territories and jurisdictions in the U.S. and Canada. So if you're selling on a national basis or a multi-state basis, there's a large workload from a compliance perspective. And then here, this is basically what we talked about in the prior slide. You've got all these different types of taxes, and each of these are going to translate into a form that's got to be calculated that's got to be populated accurately, that's got to be remitted, that's got to be delivered on time, and a payment needs to be made on time. And so the timing of that can vary by jurisdiction. You can have monthly returns, quarterly returns, and then a whole set of forms that needs to be delivered. And so, this is frequently a really large pain point for customers in terms of, being able, just to handle the sheer volume and complexity of returns that need to be filed. And in addition to calculation, the compliance cycle is a big point around automation. And so here we just wanted to provide, a high-level overview of how we work with Sonar. So we've got, a long-standing partnership with Sonar. We have, they provide a whole set of capabilities to ISPs from a back office and operational perspective. Where we hook into is really within the billing module of Sonar. And so, if you follow this blue line, basically the way that our integration works is, these are going to be AR transactions. These are going to be invoices that come out of Sonar. Those are sent over to our AvaTax for Communications engine. We have a pre-built connector that integrates out of the box within Sonar. So this is something that we've jointly developed and integrated. It is hard. It is, hardened integration, and we put a lot of effort in terms of just being able to make this a very simple and make the integration easy. But those transactions come over into AvaTax for Communications on a per line item basis. We're going to calculate the tax. And then if you follow, this orange line, we're providing those tax results back into Sonar, and those are integrated into the invoice along with any invoicing literals that need to be stored from a GL and operational perspective within Sonar. Now, the other piece of this is once we've calculated those transactions, we are storing those securely in the cloud. And what that allows us to do is to tie in our optional service, which is our returns for communications solution, which allows us in an automated fashion to take those transactions and the tax that's been calculated, assign those to the proper form, prepare all those forms, remit those automatically, and submit payment automatically. So we can fully automate, kind of the full tax compliance lifecycle through our joint solutions, from billing to calculation to remittance. We also have a certificate management solution. Again, this is natively built to apply exemptions. If you're selling if you're selling into exempt institutions like government agencies or religious institutions, you're going to be collecting, or if you've got a reseller channel, right? It's going to be important that you're collecting exemption certificates. We have a capability where you can collect those automatically, and then we are soon going to be able to offer the ability to integrate that within our tax engine, so that you can send transactions to us, and we have the ability to automatically apply those exemptions. And exemptions are, an important part of the compliance cycle, particularly when it comes to audit defense. Okay. One thing we wanted to share here is we have actually conducted a study in partnership with Forrester, where we've basically done outreach to a whole set of our customers to really understand the business case, and the benefits associated with automating tax and compliance. I'm not going to go through all these details, but as you can see here, there are a lot of efficiency and direct cost savings. And typically what we have seen and heard from our customers is that they're achieving, an ROI north of 100% within 6 months of implementing our solution. And so again, this study was conducted across customers of all shapes and sizes and tax scenarios. I think this speaks to the overall benefits of automation. And now we just wanted to talk a little bit about, what are some of the risks of manual tax compliance? So within our communications business unit, we've conducted a separate study in partnership with a market research firm, Aberdeen, where we have gone out and, spoken to our customers about, look, what are the challenges that you're trying to solve? What are the core issues that you're facing? What are some of the fears and top of mind issues that you're trying to resolve? And I think the results of these are pretty interesting, right? So the first slide here is, what are the top challenges with communications, tax management processes, right? And I think the thing here that's really interesting is that, these concerns are really evenly spread, right? The largest concern was just simply difficulty determining which services are subject to tax, right? And which tax, right? So the whole notion of being able to map your products to a unique set of tax types was a big challenge. Lack of efficiency in tax calculation and reporting processes, was a big challenge. Here on this bottom row, the lack of internal tax expertise. I mean, we hear this consistently that, this is a really specialized area of expertise. And there are just a lot of challenges in terms of being able to maintain internal staff to support it. And then the last piece is here, staying up to date on regulatory changes. So again, this not only gets to the rates and rules and tax rates that change, but also forms change and being able to stay up to date on that on a month-to-month basis. And then the last piece here is the difficulty in managing exemptions. So it really cuts across kind of all aspects of tax and compliance here. And then the second area that we looked at is, what are the fears related to taxes? What are the things that are driving challenges? And the one that kind of stood out here is the first item is that, we're innovating before we're prepared to handle tax issues. So this, if you work in a tax department, this may be a scenario that you're familiar with where, your product organization says, hey, great, we're going to launch this new capability in the next week. And we've got a great forecast around it, and it's going to drive a lot of bottom line and top line benefits. But then it's typically, the tax department is the last to hear about this, and there's a rush to figure out, okay, how do we tax this accurately and not create unneeded exposure? The second item here, integrating new existing or future systems, right? So frequently we're working with customers that they may have multiple billing platforms that have built up over time or through acquisition. They may have different platforms for how they go to market, right? There could be an e-commerce platform versus a direct sales. And so frequently what they're doing is they're looking to consolidate that within a unified platform like Sonar. And so there's a lot of concerns around, from an IT perspective, how do we achieve integration with a tax engine? And so, as we talked about before, we feel like we've solved that in terms of having a pre-built integration with Sonar. Georgette's going to show you in the demo, basically the setup and configuration is just handled natively within the Sonar environment. And so, ease of integration is a big area of concern. And then the last ones here, these are really straightforward, right? They're concerns about fines and penalties due to non-compliance, which can be stiff, the risk of audits. And I think it was interesting that only 11% of the respondents, had no fears related to taxes. And then the last piece here before we get into a demo is, okay, we've got these challenges, we've got these things that we're concerned about. What are the areas where we actually have historically failed, right? What are we looking to solve for? And so, here there's the miscalculation of tax rates, right? Again, you're dealing with tens of thousands of jurisdictions. exponentially more rates and rules. It's simply not possible to manage that manually, and doing so can create a lot of issues around accuracy. Improper documentation. This relates not only back to what we talked about with exemption certificates, but also maintaining, current versions of compliance forms and registrations. And then as we follow this down, right, you can see that there are some challenges here. Opting to file sales and use tax instead of communications tax, right? Simply just not understanding what services are subject to what tax. And a lot of that is driven just by, some of the other items here, unclear statutes. Another point that stood out is miscalculation for bundles, right? So, increasingly we see customers trying to consolidate multiple products into a single price point, and, to really provide simplicity from a pricing perspective, for their bundles. And so maintaining those has been a big practice. And then the last one here is just, some of these jurisdictional changes, right? The boundaries of a jurisdiction can change. There can be new tax types that are introduced. There can be new applicability in terms of taxes that didn't apply to a service now applying to a service. And so as you can see here, there's really a wide range of places to fail, which again kind of speaks to the need for automation. And then the last piece here, just some of the unique challenges specific to IT and regulatory compliance. And so, outside of simply, calculating taxes, ISPs are subject to a whole set of federal regulatory charges and forms that need to be submitted for that. So those could be 499s or 477s. And then there's a whole suite of more technical compliance, right, around, NANPA and broadband penetration. And so, that's a whole separate set of challenges outside of just kind of the core tax compliance. The other is proliferation of new services, right? What we see are companies, typically starting out, offering one or two products, but quickly expanding, from say data to voice, layering in video or streaming, providing potentially managed services or hardware capabilities for, enterprise customers. And so that just increases the scope of what needs to be managed from a tax perspective. We talked a little bit earlier about bundling and just some of the inherent complexity there. That's something that we solve for, where we've got a really robust bundling capability that allows customers to easily build bundles, assign those to the underlying taxes, and allocate those on a percentage or a dollar basis. There are implications of government-sponsored subsidies when it comes to tax. And so frequently, if you're a provider and, you are awarded a subsidy, those can have tax implications in terms of potentially being exempt from certain taxes and being able to manage that. And then the last item here, I think is something that we can all relate to, is just, kind of the ongoing continual resource challenges, right? Having to do more with the same amount or potentially fewer number of resources, and being able to invest in and hold on to what is a really specialized set of capabilities and expertise. And so with that, Georgette, I'm going to flip this back to you, and we can get into a demo.
Absolutely, Steve. Thank you so much. You hit the nail on the head with so many issues that I see our customers that come into implementation are concerned about. Just leveling the playing field, making sure that everything is happening automatically in the back end. And I know that Sonar really values our partnership with Avalara. So without further ado, I just want to pull up one of our demo instances of Sonar and show our participants exactly what this is going to look like when we're going through the process of integrating Sonar into an active, integrating Avalara into an active Sonar instance. This can be done whether you are a current customer of Sonar or you are coming in as a new prospect to the Sonar family. So here under the settings module, we would go to the billing area, and we've got this tax providers area. People can choose to do their taxes manually in Sonar. They would be responsible for all the updates and validations for any changes in tax jurisdictions, whether that's local taxes, county taxes, state sales taxes, things along those lines, or they can choose to go with Avalara, which is what we would recommend. So this instance does have an integration stood up. We are just going to edit this so you see what the different fields are. When an account is coming through implementation, or they're deciding they want to adopt this as a feature functionality in a functioning Sonar instance, we would stand up a sandbox so that we can do testing. We want to make sure that we are loading in your service plans, your addresses, so that you can take a look at people that are in a county jurisdiction, out of a county jurisdiction, what needs to show up per service plan on those lines. Are you taxing at the service plan itself, and then you've got additional seats that you need to file taxes against as well, or collect taxes against as well? So you're going to name your integration. You're going to enable this. You're going to decide which taxes you're including in your tax calculations. And if you're doing sandbox testing, we would have the proper information working with the Avalara team to make sure that we're connected to your Avalara sandbox initially. And then once everything looks good and we're ready to go into production, we'll mirror these configuration settings in your Sonar instance. You're also going to answer questions about being a facilities-based provider, if you have a franchise agreement, or if you're regulated. So that's really how you enable the integration itself. And that's done under settings and tax providers. And then at the service plan level, what you would do is, let's go ahead and take a voice service, because I think that's the easiest way to look at this. If you wanted to edit the service, you're creating that new service, you're providing the country that you're operating in, what the debit should be, how often they're going to bill that service. But this is where the magic happens. This is the tax type pairing. So you'll see that we've selected private line interstate 1-4. So this is what this is going to hit against. When you saw Steve's representation of the circle, we start in Sonar, we take it out to Avalara, we run the calculations, we bring it all back in, but then you still have the reports in the cloud with Avalara. This is the secret sauce right here. And then we're just going to fill out the remaining information on the service plan itself, if you're going to limit it to specific groups of people who are eligible for this service, and then just the additional pieces for how you want this displayed on the invoices, whether you want CDRs or shown in the invoice as well, or if you want to roll up those generic parameters. So you'd simply save that service plan, and then you would attach that service plan to the account. And when billing runs, whether it's the first day of the month or the 20th, all of those automations will fire when your billing routine begins in the middle of the evening. So it's minimal disruption to your customers' accounts. So I think now what we want to do, now that I've been able to share with you what the integration looks like itself in Sonar, I'm going to hand the reins over to Jason for a moment to talk about what happens with the data once it is actually created on the Avalara side of the house.
Thanks, Georgette. Perfect. So yeah, as those transactions are being processed through Sonar, all of that data is being stored on the Avalara side in our reporting portal, and that is going to then be able to be used in our compliance filing portal for filing those returns, remitting all of those payments, things of that nature. So what I'm going to do at a very high level is walk through our reporting portal, show some sample reports, then walk through our compliance report, our compliance portal, and show some of the reports on that side as well. So what I'm going to start with, I have up first is our tax engine reporting portal. And from this portal, you'll have a number of just kind of out of the box reports that you can select. We have our compliance report, a transaction service type report, a transaction detail report. I'll show some samples of those in a second as well. You can also create custom reports in here. You'll notice these are identified by the little trash cans, so you can delete them when you no longer need them, things of that nature. But I'll show you a quick way to create custom reports within our reporting portal as well. Once you've selected the report type that you want to look at, you can select the period of data that you want to look at. So you can look at an entire month's worth of data, or if there's a specific date range you want to look at, you can narrow it down that way as well. You can include things like no tax transactions, right? Those are simply just going to be products or services that aren't subject to tax. We still track all of the other data that gets processed through our tax engine, so you can view that if you want to as well. You can view committed transactions, uncommitted transactions, all transactions. From a very high level, committed transactions are essentially going to be those sales that are final, right, that you're actually invoicing your customer for. Uncommitted transactions would be more things like estimates or quotes that haven't actually been finalized yet. Once you have all of these selections, you can preview the report here in the portal itself, or you can download it, in which it would be available in a CSV format for you. I also mentioned that you can create custom reports. So that's done by clicking on this columns tab. This is going to bring up a couple different lists here. One of the selected columns. These are going to be the columns that are currently in the report that's showing. The available columns is going to be really kind of all of the potential information that could be added into the report that you want to see. So if there's information in the available columns that you want in the report, you can just drag and drop it into the report. You can move around the columns so that you can put them in any order that you want to see them in. If there's any information in the report that you don't think is relevant, you can remove it. And then you're simply just applying that, and you can save that as a template. And once you save it as a template, it's going to be available for you in this dropdown. So you don't have to go in and keep generating that same custom report every time you go in there. It's automatically available for you. Let me jump into some of the sample reports so you can see what they look like here. The first one here is going to be our compliance report. And this is summarizing your tax liability by jurisdiction, by tax type, by tax level. It's also going to show you what the tax rate that was used for that individual tax type. It's going to show the gross sales for that tax type, any type of exemptions, adjustments, the net taxable measure, things of that nature. It also tracks those minutes and lines. If they are applicable to that particular tax type, it will track that information through it as well. The next report was the transaction detail report. This is a much more granular report. This is going to show all of the individual transactions that get processed, from Sonar to our tax engine. And so it's going to show you things like when that transaction was processed, what was the invoice date used on that transaction, when was it committed to our system. It's also going to show the taxes that are returned for that particular transaction. So similar format as the previous one, it's going to show that jurisdiction information, the tax information, the tax rate, tax amount, exemptions, adjustments, all of that. What this report additionally shows is the input information that was sent to our tax engine, as well as that output of taxes, right? It shows what was the product or service being sold. Within the Avalara system, we refer to that as a transaction service type. So it identifies the type of product or service being sold, how much was charged for that product or service, what was the customer type, what was the sales type, or was it a facilities-based sale, things of that nature that can have an effect on that tax rate or tax application. So this just provides you all of the individual transaction information at a very granular level for you. The final report here on this side of things is going to be the transaction service report. This is used more for those regulatory filings. You're breaking out revenue by product, by jurisdiction. You're needing to show that information on some of the regulatory filings. That's exactly what we're doing here, showing your input charge amount broken out by the type of product or service. Again, that's our transaction service type. and then also showing the jurisdiction. This particular report goes down to the state level. This report can be run at the local level as well if needed. So let me jump over into our compliance portal now here as well. And so from this side of things, right, those reports are being generated from our tax engine on a monthly basis. That information can be brought over into our compliance portal to populate the returns so that we can file and remit those returns on your behalf. And so this compliance portal I have up, the first page I'm on is view and add returns. And this page is essentially where you're setting up your filing calendar. You're going to identify the different returns that we're going to be filing on your behalf. You're going to be identifying what the frequency of that return will be, right? Monthly, quarterly. What's the method? Is it electronic filing, paper filing? The effective date, when do you want us to start filing and remitting those returns on your behalf? So that's really kind of that first step of the process. And then you get more into your monthly process where you're approving those returns. You're seeing the data on a monthly basis, approving those returns so that we can then file and remit all of those returns on your behalf. And so in this particular view, you would come in here at the beginning of the month. The data from the previous month would be populated onto those returns. You would be able to see the detail of all of those individual returns in those jurisdictions. So you can see what your total sales were, what the tax calculated was, how much tax is due for each return. And it allows you to drill down into even more details, specifics about adjustments and credits and rounding items, things of that nature for specific returns. So you can really drill down into those pieces there for that. But yeah, you're basically able to see that, approve those returns, and then we file and remit those throughout the entire month. This is also going to break out and show you those, annual, quarterly, semi-annual filings where there are amounts being held over for those specific returns so that you can see kind of what those returns are, what's being held over, again, being able to drill down into those individual returns even more. Then we also have this regions needing attention tab. And essentially this has a couple different uses, but if there was maybe a return that wasn't set up to begin with, or you now have new customers and new jurisdictions and you haven't set up that return yet for that data coming through in that new location, this portal is essentially going to identify that for you, give you this kind of raise its hand and say, hey, you're collecting data in this location. Do you want to actually add this return so that you can start filing and registering and remitting payments for those items? So it notifies you of those different regions as well. Then as those returns get filed, you're able to come in here and actually view what those returns are that we filed on your behalf. And be able to drill down into any more specifics of it, but you can see the filing period, the form that was actually filed on your behalf. And then again, you can drill down into more details, more adjustments on here. It's going to show you any type of rounding items that were incurred, discounts that were applied, things of that nature. And then the final piece to show here is going to be the reports from the compliance filing side of things, right? So within the portal, you're able to come in here, look at some tax return reports, liability reports, select the different report names, select the period that you want to view and create that report. And so I'll bring up a few examples here of those different returns from the compliance portal. The first one being our variance report. This is going to look at your tax liability from the previous period and compare it to your tax liability of the current period. It's going to show the difference in a dollar amount and a percentage amount, if there is any. And it's going to do that for every individual tax return that we are filing for you. Again, if there is a difference, right, it'll show up here both the dollar amount and percentage for each individual tax return. And then at the very bottom, it's going to show you kind of your total liabilities and what that difference was there. The next report is a held report similar to what was in the portal itself, just an additional report that you can view to show kind of those amounts being held over for quarterly, annual filings, things of that nature. And then the not authorized report is going to be similar to that needs attention section in the portal itself, just identifying where you have data processing through the tax engine, but that return isn't essentially set up. You haven't authorized us to be filing and remitting that return on your behalf. So just kind of multiple ways to make you aware of that information and that data. And then the last report to look at is our liability return detail report. So you're going to be able to view this via the actual return, the form description, the frequency, the jurisdiction information. And what this does is it's going to break out kind of your sales amounts, your tax liabilities, all of that information in a couple different scenarios. It's going to show the sales tax, use tax if you have any, and then break it out into a telecom tax section as well. And so you can kind of see those from an individual standpoint. And then at the very end of this return, it's going to give you kind of those totals, what your total tax is, what your amount that is needing to be remitted is. And it's going to take into account things like discounts and adjustments and prepayments and all of that type of information. So just provide all of this reporting at the most granular level to make it as transparent as possible for you. And so from a very high level, that's going to be all of the information and kind of that process of how it works through our tax engine into the reporting portal, into our compliance returns service as well. So I think at this point, I'm going to be handing it back over to Steve for some final comments.
Yeah, great. Thanks, Georgette. Thanks, Jason. Yeah, I mean, I think you can, hopefully what came out of this is, tying together our solution with Sonar is not, an IT intensive endeavor, right? I mean, it's really more of, you're setting it up within a few clicks, within a screen, you're mapping your data, and then from there, everything just runs and your transactions are calculated and pushed back into Sonar seamlessly. And so, we do think there are some benefits from an end-to-end platform and capability perspective. I touched on the first, right? You're avoiding extensive integration costs. You're not having to pay for expensive IT integration between Sonar and the engine and a returns platform, right? It's all pre-built, all pre-integrated. And through that, you're really gaining end-to-end visibility into your tax and compliance process, right? It's one company, we're calculating the tax, we're prepping the returns, we're using the same technology stack, we're using the same rates, the same rules. And so in doing that, you're not only getting transparency, but it's eliminating any, troubleshooting or finger pointing, in terms of trying to determine where an issue occurred. And overall, it's just going to reduce the time and complexity, not only around that tax calculation piece, which really has to be automated, but there's some significant efficiencies in terms of being able to tie that together into the compliance cycle and prepping, filing, and remitting the returns. So in summary, we feel strongly we've got a great solution, for ISPs. And the key benefits here, we talked about ease of integration. We're able to offer a complete yet modular tax solution, right? So you can buy the engine or leverage us for the returns. But each of those can be used independently. There are a lot of benefits in terms of automating across the compliance cycle. Because we're maintaining the rates and the rules seamlessly in the cloud, there's going to be a reduced risk of penalties, interest, and audits. and again, we've got a proven track record, right? We've got a long-standing relationship between us and Sonar, and we've been able to drive a lot of benefits for customers over the years in the ISP space. And so, we feel really good about our joint value proposition here. And so I think that's it. I think now we can open it up to any Q&A.
Steve, I've been checking the Q&A, and one question really popped out to me. It says, how often do tax rules and rates change, and how do we stay compliant without spending hours on research each month? And I really think that you addressed that during the presentation, but I think it's a pressure point that we could absolutely revisit.
Yeah. That's a really good question. So I would tell you at a minimum, the rates are changing on a monthly basis, right? So again, you've got rates and rules at a special district, a city, a county, state, and at the federal level, right? And so every month, there are going to be changes to those rates, not only in terms of the specific rate itself, but also how it may apply to a product or what set of products it applies towards. And so again, that's something that we handle and we fully automate. So we've got what we refer to as our content team, and that's a whole team of analysts whose sole role is through automation tools and aligning tightly with the jurisdictions where they are checking for any changes to rates, to taxability, to jurisdictional boundaries, and that is all updated real time within our platform, right? And so that's something that we just handle natively with our solution, and is a problem that our customers no longer have to worry about.
Excellent. Emma is asking what the cost is for leveraging a solution like this in broad strokes. Is that something you want to share with?
Yeah, in broad strokes, it really does depend. It really does depend on volumes. And so, the way that our pricing is set up is customers are tied into usage tiers, right? And so an example would be, from a tax engine perspective, our lowest tier is $500,000 in gross revenue on an annual basis, right? And they scale up from there, and there are economies of scale with that pricing, right, as you drive more volume. And then from a returns perspective, it's very similar. It's just tiers based on the annual volume of returns that are going to be filed within that 12-month period. And I think we start at 25 returns, and then we scale up from there. They're nominal one-time fees for setup, and then again, everything is just kind of a recurring subscription. But our pricing is set where we can kind of take all comers in terms of size. And so I think we've got pricing that's tuned towards smaller providers, mid-tier providers, as well as larger national ISPs.
And from the Sonar side, just reach out to myself or one of our client relations managers. If you're already a Sonar customer, we can talk you through what pricing looks like. Again, how many subscribers you have, how many lines that you're working through, what implementation looks like in terms of timeline. And I did have another question on where do you pull the tax rate information from?
So we pull the tax rate information. There are multiple sources, right? But they are published by the jurisdictions. And so we either pull those sources, where we have automated feeds. But, some of these smaller rural jurisdictions, these things are literally getting posted on their sites. So, our company, our teams have longstanding relationships with the jurisdictions, and it's kind of a blend of manual and automated capabilities for us to drive the right rates and rules. And I would also add, the team also stays on top of kind of proposed regulatory changes, right? I mean, frequently, some of these things are forecasted and have to go through various, state houses. And so they're also kind of proactively monitoring
Keeping an eye
that
on it.
regulatory landscape. Yeah.
I've got another question that was asked prior to the webinar. So how does the solution support future growth, like adding new service lines, bundling, or even expanding into new geographies? And I want to answer that a little bit from the Sonar side. Once your integration is stood up, you may need to update what jurisdictions you're collecting taxes in within the integration itself. But it's very easy use. You would launch those services, those service plans, and based on the serviceable addresses, that information is passed over to Avalara, and Avalara taxes based on the TS pairings. So it's very, very user-friendly for expansion and growth opportunities.
Yeah. Yeah, I think that's well put, Georgette. I mean, I think, we provide a lot of capabilities in terms of customers being able to tune where they're collecting tax. But if you use the engine out of the box, right, and you've got a product that's mapped to a specific tax type, out of the box, you can sell that on a national footprint, and we will tax that accurately. Right. Frequently, what customers are tuning or changing is they're adding a product, they're creating a bundle of multiple existing products. Right. And as Georgette touched on, right, that's just a very simple, mapping exercise in terms of saying I'm selling this product and it falls into this defined tax category, which is the TS payer. Right. And to a large degree, that's it. Now, we do have some customers that have like to set up, have a more complex tax policy. And so we do provide the ability to implement tailored rules or exclude certain jurisdictional areas. But from that point, it's very easy. And then as Jason touched on, from a returns perspective, it's literally just going into a portal and enabling the returns, clicking the returns that you want to file. Right. And I think Jason showed, there was one tab, returns needing attention. What that really is customers have started selling into a new geography, or they haven't hit a certain threshold. They're not ready to file yet. But we provide a very easy way for customers to kind of monitor those liabilities that they're collecting, and for them to set up the returns and the filings, with just literally a few mouse clicks.
Well, gentlemen, I know that our time is drawing to a close. I do want to take one more question from our live participants. Thomas asked if you guys integrate with other OSS BSS providers, or would they need to move to Sonar? I do know that y'all integrate with other providers, but Thomas, we would certainly want the opportunity to earn your business at Sonar, and I think it's worth popping the hood and taking a look at what we can provide for you. We take our partnerships very seriously, whether it's integration partners or our client partners. We want to help people grow bigger, stronger, faster. And we do that by automating as much as possible so that you can get down to the business of your business. We'll take care of the other pieces and parts. And partnering with companies like Avalara is what makes that possible. I want to thank the FBA for their time today. I want to thank both of you gentlemen for speaking to what this integration looks like. And I want to thank our participants for taking time out of their day to listen in on what solutions we can provide with Avalara and Sonar together.
Yeah, that's great. Thank you, Georgette.
And I also just want to echo those thank yous. Thank you, Georgette, and thank you to Sonar and Avalara for providing this content. Of course, thank you to Steve and Jason as well. And thank you to all of you who have participated today. We do appreciate it and look forward to seeing you on the next one. If you do want to find out what else FBA has in store as far as webinars go, you can follow that QR code or the link that's in the resource tool there, and go out to our website under the events tab and see our other webinars that are coming up. And of course, we also have Fiber Connect right around the corner here on June 1st through 4th. And please go out to our website and have a look at our regional events as well. We'll be in a number of places, with Anchorage, Alaska being our next stop in July. So we're looking forward to that. And we look forward to seeing everybody on the next one. But thank you, Steve, Jason, and Georgette. And thank you again, all of our attendees. Have a great day.
Thanks so much.
Bye-bye.